Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Thursday, October 23rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at some of the top headlines, the overnight price action in commodity markets and the precious metals. So you got stock futures. They are edging higher here after Wednesday's declines. We saw some big rotations going on with some of the momentum trades like AI losing some steam. The earnings misses are piling up in the tech sector and geopolitical tensions are back in focus. You look at WTI crude oil here, leading the charge in the commodities complex at 61.74 on the December contract. That's up about 5.5%. So remember, they do have some of those smaller contracts. If you like to get involved with the commodity markets here, and specifically crude oil, they do have a 100-barrel contract. So oil jumped after the U.S. announced sanctions on Russia's biggest oil producers. When trading these commodities here, you want to pay attention to these global macro markets. It's critical to monitor some of the connections between them too, because when you get rising crude oil prices, you oftentimes get a stronger dollar. What's that do? That leads to 1 year higher inflation expectations, and then you get an increase in the 10-year treasury yield. So you got 10-year treasury yield up about 3 basis points here, sitting at 398. So we'll see if we can cross back over that 4% mark. Looking at the equity indices, the S&P 500 and NASDAQ contracts, they are a little change here, slightly higher. You do have a lot of ebbs and flows going on with some of the earnings, with some of the tech, with how higher inflation expectations, with how higher energy costs here are going to drive some of these markets. You did have Tesla. Those shares, they are lower in the pre-market after the quarterly profit had plummeted. You got IBM also disappointing. We'll be watching Intel that is due to report after the close. Now you go back to the precious metals markets. You got platinum up about 3%, sitting at 1604. That's up $52. And really, platinum is what led the charge here yesterday, and it could have been front-running some of these news that these sanctions were going to be put in place here on Russia. So spot prices here in platinum in London, they surged by as much as 6.4% to 1646 an ounce. This was on Wednesday here. It was the biggest jump since 2020. So the benchmark spot contract hit a 53.45 per ounce premium over the futures, and that's up $28 on Tuesday. So that suggests that there's a bit of a scramble going on to obtain some of the physical metal, and platinum is tightening heavily with dislocations now pushing to extremes, echoing some of those fears here of a silver type squeeze moment. So what we'll want to do here is I'll go back on the Bloomberg terminal, and what I'll do is I'll look at where like those spot prices are at. Then I'll look at the leasing rates for platinum, and we'll see if we get any kind of explosive move higher here. So I might be looking at some call spreads for some clients. Not a recommendation here out to the public in that platinum market. Some of the critical levels in gold and silver, and oftentimes I won't come in there and try and catch that falling knife. I'll wait for prices to stabilize, hold on to some critical support levels, and start working their way back up. So if you look at the gold market, one of the critical levels we'll be watching, like forget the 4,000 mark here, because a lot of these hold numbers and things like that, people become anchored on them, and it actually becomes like a poison in their head. You want to look at what the price action is. I don't even need to know what the price is. I could just look at the chart pattern, look for a series of higher lows on the charts followed by higher highs and higher all-time highs, or you get those lower highs, lower lows on the charts, and the chart really moves from the upper left on down to the lower right, or vice versa. And that's how you get attack these different markets here, because I could tell you that beyond the precious metal space, many of these other commodities here have been spectacular and have just blown away, things like silver and things like gold. You look at where live cattle, feeder cattle were. They were on a 5-year bull run here. We'll see if that's ending. There is some news here with Trump trying to work with some of these cattle ranchers to get some of those beef prices down. So we'll see if there's any kind of topping action here in those cattle markets. But getting back to the critical levels in gold and silver, I'll be watching at 40.2120. That was yesterday's low here in the market. Then on silver, it was 46.82. You also look at the October 10th low, which was 46.70. So we'll want to see, is this market going from where it was a bull market to now it's starting to consolidate? So what we'll want to see is how this market moves up. Can it continue up, and will it break out to the upside, or are we just going to go back and forth here? So look at the S&P 500 chart, and you can see how it's been consolidating sideways, pushing on up to like 6,800, then back down to like 6,650 or so, and then kind of bouncing back and forth. We'll see if the gold market kind of mirrors that type of chart pattern here. So getting back to some sectors in focus, you're going to have those energy stocks. They're likely to be active here as oil jumps after the U.S. announced those sanctions on Russia's biggest producers here. You'll also have, and this is the reason why the Russell 2000 is up probably about 0.5%. right now. Given these higher energy costs, given the higher inflation expectations, it's really that you're starting to get some of these quantum computing companies, some of these small caps here, they're in focus after the Wall Street Journal reported that firms are in talks to give the Commerce Department equity stakes in exchange for federal funding. So that's an interesting note here to keep an eye on. So we'll throw up a basket of some of those smaller quantum computing stocks and look at those, specifically the ones in the Russell, because again, the Russell up 0.5%, 2475 here last. Now we get into some of the other markets, the checklist on the pulse of the markets here, the trends, the FX rundown. I always look at the dollar index here. So you got the dollar index of about 25 basis points at 98.90. So that's pushing on up here. The Australian dollar up about 19, and you're seeing this connection here between the US, Australia, these rare earth rights that we're negotiating quite well with here with regards to Australia, putting out a plan in place here to try and dislocate ourselves from that reliance on China. You're also seeing the peso, the New Zealand dollar, both pushing up here. The euro currency and also British pound, Canadian dollar pushing just a little bit lower. So you want to pay attention to all these different markets. Remember, the US dollar index is just a weighted index of 6 different currencies: the euro, the yen, the pound, the Canadian dollar, the Swedish krona, and the Swiss franc. So back to the 10-year Treasury yields, again, up 3 basis points at 398. And then finally, the November VIX futures, they teeter right on the edge here. So if you throw the VIX futures up and you look at those November VIX, it's sitting right at about 1943. Now, it did reprice itself a bit higher as you get these adjustments here where you go from the September futures to the December futures on the S&P 500. And it's the calculations that go into the volatility index because of these higher strike prices. But we still are right on that edge where when you see the VIX futures go up over 20, like if you're intraday trading on the S&P 500 and you're getting chopped up, or all of a sudden things look good, you're on the long side, and then the market really starts to get wild back and forth, and then you're getting frustrated, you're going back and forth, you're just getting diced up. You want to look at the volatility index, because if the VIX goes up above 20 here, you start to see people's hair on fire, and you also see a lot of modifications. Remember, there's big different systematic funds out there that are trading in these markets, and they'll adjust things based on volatility regimes. And when you pop over 20, you're going to get that different one. Now, looking at the data that's coming out here, the initial jobless claims here for the week ending of October 8th, those September existing home sales, Kansas City's Fed October manufacturing survey, they are scheduled, but guess what? They ain't coming out here, so due to the government shutdown. So you take a look at those global markets, you'll have European markets, they edge higher because of that energy sector. You got Asian stocks, they decline modestly after the White House announced it's considering curbs on China that would purchase a wide swath. Wait, what are they saying over here? So this story is a little bit messed up here. So basically they're just saying that Asian stocks, they were declining because of the fact that the White House said that they were going to throw some curbs on purchases of some critical software. That was when we saw the U.S. equities in the tech sector really sell off here yesterday. Then the MSCI Asia Pacific Index fell 0.3%. It's its third day of declines. Monday, it reached a record high. So a lot of people saying that we're in a bear market, things like that. You know, you really want to put yourself in check here and look at like where was the all-time high at? It was a couple days ago here. My suggestion here, not really a recommendation to the public. If you're going to start to look at attacking the downside, you want to have a plan in place. So you'll start to see either a series of lower highs on the chart, or if you're going to just pick the top in the market, you obviously want to have a stop above where the market's at because of the fact that we could continue to run higher here. And then if you look at things like the micro S&P, you do see that they do have put options there that are serial ones that go every single month, or you can do calculated put spreads. And that's oftentimes how I start when I'm looking for a change in direction on some of these different markets here. So looking at the market moving data, the earnings, the events coming out. As far as earnings, you're going to have Ford, Intel, Newmont later on today. We'll be watching Newmont because of the fact that it is one of those mining companies that we all enjoy. Looking at the earnings front here, so of the 112 S&P 500 companies that have reported so far these earnings, 85% have beat the analyst forecast, 14% have missed. So what are these markets thinking about the future interest rate cuts? You go to the CPI, you look at some of the insights with that. So we're going to have this CPI data come out here on Friday, and it's the September inflation data. It is expected to get this 3 handle cycling up to about 3.5 3.10%. So it's going to be over 3, but we expect that equity traders, they are likely to shrug off this evidence of this stubborn inflation on Friday's CPI report here. The market narrative is really dominated by the optimism that no matter what happens, the Federal Reserve is going to cut rates here next week. We are in the Fed's communication blackout period here till that day after the Fed meeting. And you look at the CME's Fed Watch tool, you do have a 96.7% chance of a 25 basis point interest rate cut. That has come down a little bit, and then the unchanged has risen up to 3.3%. It's because of the fact that you got energy, you got 10-year yields pushing on up a bit. So you look at the ETF flows, and it's really important if you're trading gold, silver, things like that. You see the ETFs, they sold 297,000 troy ounces of gold. It was the most in 5 months. So you do have some traders that are like, I don't want to be in this thing if it's going to break below 4,000. So they jumped out of the market here. And I think that that's what we saw. But gold, you still got this 18% total gold held by ETFs. 18% rise this year to 98.6 million ounces. You do have gold up 56% this year, trading at $41.30, so up $64. And then you look at the ETFs, well, they did cut that silver. So they bought that big dip. And then I think that they were a little bit concerned about the squirrely action that we saw in some of yesterday's trading here with increased volatility, and then they lighten up some of those positions. So that's natural here that you'll see this from a mass amount of people. But silver futures up 2.5% here, tracking that platinum higher. Our metals fund here looks to be adding some platinum call spreads this morning, are attempting to do so. So you guys got any questions? You want to talk to me more? If you're interested in the wealth management side, we do incorporate a lot of these different commodities into our process on U.S. equities, and we find that having a basket of some of these commodities, some of these key commodities here, along with some of your big top names here in the equity space here, we really start to see portfolios do well here as far as when you get the rising inflation expectations, because we will have some exposure to energy and some of the energy related stocks. So you get something like today, then you get the snapback in the metals markets. You'll see those also improve as well. You get a little bit of a rise here in Bitcoin, up about 1.6%, but the cryptos have really been a dog here recently. So we'll see if I can capture some key levels here, get back over that 110, 112, 116 pivot, and threaten to break out over that 123 level. So again, you guys got any questions, shoot an email, info@bluelinefutures.com. And remember that futures and options trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.